Oh, it would be nice to move for a moment away from international relations and politics and actually talk about what you talk about at home. That's because you were all in cash and called up December 24th and said, I'm going to cash. Let us review the Grisanti memo. How about this? January 14, Amazon, buy, Roku, Berkshire, Buffett, gas producer EOG, Centene, Facebook. Where were you on January 14th? Chris Grisanti of Grisanti Capital Management had the buy tickets out like Ace Greenberg from another time in place. It's been an historic time. We're now to March. Now it's comfortable to go into stocks.
Sure.
Not go to cash, go to stocks now. All my radar's up. Can you acquire shares March 1?
You can acquire shares in some things, Tom, but you have to be a lot more selective. The week after Christmas, I think, was the first time maybe 3 or 4 years where we had real bargains across a number of sectors, and that opportunity is gone now.
Okay, here's a chart. Let's bring it up. This is the correlation chart. I've showed this, a correction chart, rather, and the bear market, and let's just focus in here on correction, bear market, doom and gloom, 24th, up we go, moonshot. Everything's gone up. It's a double-digit year. Why don't I just go to cash and book 11%, 2019?
Well, for a couple of reasons, Tom. One reason is it could be a lot better by the end of the year than it is now. And that flies in the face of consensus, which is part of the reason why we like that. Everyone said you couldn't have a V recovery. So far, so good. But we don't see the factors that will stop a pretty decent market this year.
It's a type 2 thing. The gloom isn't, you can't frame the gloom, right?
Right, and we're climbing the wall of worry. And
well,
you know, in a year, if you look at that chart, we're only up 1% over a year.
And this is very important. We need to bring in Francine Lacroix in London climbing the wall of Brexit.
Right.
Yeah, climbing the wall of worries across the world. Chris, when you look at trade concerns, how would that actually affect earnings?
I think trade concerns and interest rates are the two biggest factors coming up over the next 6 months. So, but we think if you get 6 months down the road, we'll have a more benign trade environment than we do now. The only folks that need a trade solution more than we do are the Chinese, we think. So as you can see by the Chinese statistics that came out overnight, things are not great right now. So they need some more momentum there. They're cutting rates, but they need a trade solution, Francine.
All right. What about confidence? So I was speaking to someone from UBS earlier on who was basically looking at, confidence boosted by politics. Do testimonies like Michael Cohen's one yesterday have an impact on the psyche of consumers?
I don't think they're nearly as important as what Jerome Powell will say and what will come out of the Chinese trade talks over the next several months. The piece of good news this week was the postponement of tariffs, and that had a lot more good for the market than the Michael Cohen testimony was bad yesterday. I think the testimony will be in the rearview mirror in a week or two.